I guess what I am, though, waiting, and I do feel like this whole week is about what we get out of Jackson Hole, most specifically what we get from Jay Powell at the end of the week. So I feel like, I know we saw rates move a little bit lower today, but I feel like that's what we're all waiting for.
Obviously important what we hear from Jay Powell, but really I think what investors are thinking about is what that September meeting looks like. Do we get a rate cut? And I guess they got some more evidence that potentially we will see a rate cut, given that the Federal Reserve minutes came out. We saw those, the downward revision of U.S. payrolls. So it looks like more and more evidence that a rate cut is on the table.
Yeah, we're marking time until Jay Powell says those magic words, anticipating that rate cut in September, whether it's 25 basis points or 50 basis points. And then after that, NVIDIA is going to obsess all of our, it's going to obsess us. It's going to dominate all of our attention because this is the poster child for all the AI hype.
Yeah, and it kind of concludes the earnings season more or less here. Of course, we got a lot of retail earnings this week, obviously NVIDIA last week. And then for some reason, Tim, you made me sit at my desk at 10 a.m. this morning for something that apparently never came.
Yeah, well, it came at about 10:30.
Okay, well, I got to use the bathroom.
I was waiting for that, too. Yeah. We don't know yet what happened, but we know it was delayed.
Aren't you just a good little business journalist, just sitting by, waiting for that to cross?
All right, well, we get the closing bells here in New York. A bit of a turnaround from what we saw yesterday. Volume still light, but again, the sentiment and more importantly, the momentum remains to the upside. The Dow Jones Industrial Average up about 55 points, or about 0.1%. The S&P 500 is going to close higher by about 24 points, right around that 56.21 mark as we wait for these numbers to settle. Remember, 56.67 and change is the last record high, a 0.4% gain on the day. The Nasdaq gaining about 0.6%. And take a look at the Russell 2000, not only up about 1.3%, Carol, but that should, if my math is correct, going to be the best outperformance we've seen on the Russell versus the S&P all month long.
Yeah, pretty significant to see that stand out. I'm going to go back to the big caps, if I may. The S&P 500, most names, guys, higher today. 402 to the upside, Scarlet, and 100 losing ground, 1 unchanged.
Yeah, that's quite a ratio, that 4-to-1 ratio. All right, let's take a look at how the sector performances shape up when you split the S&P 500 into 11 groups. 2 are somewhat in the red, and I say somewhat because energy is little changed right now. Financials down ever so slightly because of Franklin Resources and American Express. On the upside, you have consumer discretionary due to a strange mix of retailers, which we can get into later on, materials and utilities. So some of those defensive names are doing better. Utilities and consumer staples, the 3rd and 4th best performing groups today.
As you guys know, a lot about retail today. We heard from a lot in the sector. So let's get to it. Target, number 2 gainer in the S&P 500. Folks, up almost 16% at its highs, finishing the day with a 10% gain. The company ending a string of sales declines in the second quarter. The retailer also coming out reporting comparable sales, and adjusted EPS for the second quarter that topped analyst expectations. They've been struggling, but they certainly delivered today, and investors noticed. Another one, TJX companies. This, of course, home to TJ Maxx, Home Goods, and others. This one finishing up with a more than 6% gain, hitting a record high. I think it may have closed at a record as well. Let me just pull it up here. And as we do, closed at a record, increasing its full-year projections for comp sales and profit following second quarter results that did top. Analysts encouraged by the outlook boost, and the CEO's comment that the third quarter is off to a strong start. The other thing, layer this on top of it, the company, TJ Maxx, acquiring a 35% stake in Dubai-based brands for less, so they continue to take their model and really pushing it out globally. And one more, not retail, but in the housing sector, Toll Brothers up about 5.6%. The home builder announced third quarter earnings late yesterday. Forecast diluted earnings per share for the full year that beat the average analyst estimate. So investors again noticing that one, sending it a lot higher, really outperformance in those names, Tim.
Okay, a couple retailers and a home builder for you. I got a retailer at the top of my list for decliners. Look no further than Macy's, down more than 12%, close to 13%. This after the company cut its net sales guidance for the full year. It cited a more discriminating consumer, heightened promotional environment. Mary Ross Gilbert reminded us that Macy's is always doing these promotions, but it's facing competition now from specialty apparel, off-price retailers like TJ Maxx, even online outlets these days like Shein. She also talked about that specific customer segment getting squeezed. She's over there at Bloomberg Intelligence. And then Scarlett, you heard mentioned Franklin Resources, ticker BEN. Ben, it's the on a percentage basis, the worst performing stock in the S&P 500. It is the parent company of Western Asset Management. Shares falling the most since 2020, down more than 12% today. This after Western Asset Management said Ken Leach is on leave leave of absence effective immediately. Leach faces a potential enforcement action from the SEC as part of a probe into whether some clients were favored over others in allocating gains and losses from derivatives trades. Just in the last hour, our team at Bloomberg News reported that federal prosecutors in New York are investigating whether a Western asset management executive allocated winning trades to favored accounts as part of a criminal probe into a practice known as, quote, cherry picking. And then finally, ADRs of JD.com falling today by more than 4%. This after Walmart sold its stake in JD, raising about $3.6 billion. Romaine, that stake sale marks the end of a partnership that started back in 2016. Walmart's still trying to figure out how it fits into the Chinese economy.
Yeah, let's take a look at yields here because that's where we saw some of the big moves here on the day. Treasury prices did push higher on the day, pushing yields lower about 5 basis points on the short end of the curve. More modest declines in yields on the longer end of the curve here. And of course, with that buying that we saw in the Treasury space, it started earlier in the session. Of course, it accelerated after those jobs numbers revisions mid-morning and then accelerated further when we got the Fed minutes around 2 p.m. Eastern time here, Carol and Tim.
All right, so let's get to some stories that caught our attention on this Wednesday. And this one has to do with what Americans think, what number, if you will, says that you are basically wealthy in 2024. And so Americans on average believe it takes a net worth of about $2.5 million to be considered wealthy this year. And that is a 14% jump from last year. This is according to Charles Schwab, their Modern Wealth Survey.
All right, let me just interrupt you for a moment here because Snowflake earnings just came out. And for the quarter that ended, second quarter revenue did beat analyst estimates, $868.8 million versus an expected $850.7 million. In terms of the outlook for the third quarter, it sees product revenue of $850 to $855 million. That is higher than the average analyst estimate of sub $850 million. And it also sees a third quarter adjusted operating margin of 3%. The second quarter adjusted EPS also beat analyst estimates, but the stock is down about 7%.
Zoom also out with its results. This is Zoom Video, ticker ZM. Revenue in the most recent quarter coming in a touch above Wall Street estimates, $1.16 billion. Adjusted EPS of $1.39, beating street estimates of about $1.22. The company, here's your revenue guidance for the year. The company says $4.63 billion to $4.64. That's above its previous estimate that it got, and the lower end of that range is above the consensus on Wall Street. Those shares higher by 3% in after-hours trading.
All right, also popping in the aftermarket, shares of Urban Outfitters. Let's get to some of the numbers. Second quarter comp retail sales segment up 2% versus an estimate of 2.94, so that's light on that one. Second quarter Urban Outfitters segment comp sales down 9.3%. The estimate on the street was for a decline of a little bit less than that, 8.75% to the downside. And second quarter EPS of $1.24 a share, but you're seeing the stock up about 2.6% here in the aftermarket. So we'll look for some more in terms of some of the numbers there.
Okay, speaking of more, we're getting more earnings. Synopsys boosts its fiscal year adjusted earnings per share forecast. It beat estimates. The guidance beat the average analyst estimates. Sees adjusted EPS for $13.07 a share to $13.12. Beating estimates of $12.90 to $12.98. Shares not really going anywhere in the after hours.
Well, one of its competitors are seeing its shares down significantly. Wolfspeed down about 8% right now. Of course, this is the maker of semiconductor parts here. The company reporting an adjusted loss per share of about 89 cents. I'm not quite sure what the comparison is with street estimates, but you see the reaction there in the shares here. Revenue also coming in looks like a little bit light at around $200 million for the quarter. The company also saying, though, that it is targeting a revenue range for the full year, for the first fiscal quarter of the new year of $185 to $215 million.
Kind of rough. I mean, this is a name, it's about a nearly $1.7 billion market cap making of semiconductor products. But I mean, Wolfspeed's been down about 70% year to date. So now you're looking at what, Scarlett, another 12% drop here.
Yeah, pretty painful. And of course, this is all kind of at the very end, the tail end of earnings season, which for the most part has been decent, except for those companies that have a lot of exposure to the consumer, which we've been seeing from the likes of Target, the likes of Macy's.
What was your favorite earnings so far this year?
My favorite earnings.
Oh, it's so hard to choose, Romaine. We can't play favorites here. You know that.
We love them all equally.
That's right.
All of them.
We love them all. And now we're almost at another one, another earnings season.
Do you know what Tim said about you while you were gone, Carol?
I don't know what I said about her.
Stop causing problems. No.